like a crazy amount of people actually start a trial during the sale.
Okay.
Like quite a bit more than normal. And obviously from that you get a lot of requests saying, can you extend the the discount a little bit further, just because people want to make sure that the software is right for them. So what he has done is just unofficially extended the date of the sale to the end of day Friday.
Oh, okay.
So if you happen to have not purchased, during the sale that we had, it's our lowest price of the year. You won't get MotiveWave for any cheaper than this, and you still, want to buy MotiveWave. Just drop an email to sales@motivewave.com, and Lee can extend the discount to you until the end of day Friday.
Very nice. Very nice. Okay, that's great. All right, perfect. So what we're talking about there is MotiveWave. That's Tony Lindsay, the founder and CEO of MotiveWave. They just completed their big Black Friday, Cyber Monday sale, and that went extremely well. So they are extending it. If you guys are on trial, if you have questions, let us know. If there are those of you on trial or not on trial owning MotiveWave, and there's something specific, a question you have about the platform, let us know, and I'll, Tony and I, obviously between the two of us, will be able to cover it. So let us know there. It's a little bit of a dicey market, so yeah, I have an idea of where we're going. This is pretty key here, heading into Jobs Friday, ahead of December 16th Fed meeting. So we'll dive into that. So Tony, you're gonna hang around as always if we have questions?
Yep, no, I'll be here.
Okay, awesome. Perfect. All right, thanks. That was Tony, and let's start off with the polls as we do every week here. And I am recording, so no problems there. Number one, and if again this helps us figure out what you guys are here for, how we can best serve you on this the 45 minutes we meet every week. I have some clients of tradinganalysis.com, my business, in there, clients of MotiveWave. Some are clients of both, and some are trials or potential clients. So we kind of gather, everyone gets together here on Wednesdays. So I try to make this the most beneficial for the most amount of people as possible. So just a quick little trial poll here. Are you a current client of MotiveWave? And I'm just going to launch the poll. Be one answer, yes, no, possibly in the future. And guys, there's a poll screen, so don't answer in the chat window. The screen should have changed for you. And let me make you an organizer, Tony. There we go. Okay. With 61.8% of the vote in, okay, pretty even split there. Yep, go ahead. There's guys, there's going to be something on your screen that gives you the ability to check. Maybe those of you who are dialing in remotely don't see that. That's fine. Okay, perfect. Thanks for that. We're going to close that one with 68% of the vote in. Pretty evenly split there. Number two, similar question. Are you a client of tradinganalysis.com? Yes, no, possibly in the future. And I've started inviting our customers in. So those of you who are already subscriptions to Trading Analysis, you're going to see this more regularly. Okay. All right, with 65% of the vote in. All right, yep, we're seeing a lot more Trading Analysis subscribers here, so that's good. We'll close that one. We're halfway done, guys. Appreciate this. Markets you prefer to trade are, do you trade stocks? And multiple answers are possible here, so check all that apply. Stocks, stock options, futures, and Forex. This one is always interesting with Fibonacci 61.8% of the vote in, 62% of you trade stocks, 58% stock options, 39% futures, and 32% Forex. Nice split between stocks and stock options. That's where almost 2/3 of you guys are focused, so that's great. I really like to see that. Okay, perfect. We'll close that one. And last question is the main reason I prefer to choose or will choose to spend my Wednesdays with you are multiple answers are possible, actionable trade setups, market analysis, Elliott Wave analysis, and MotiveWave education. Check all that apply, please. All right. 2/3 of the vote in, 80% of you market analysis, 71% Elliott Wave analysis, 60% actionable trade setups, 58% MotiveWave education. That's a mix. You guys want a little bit of everything. Usually it's market analysis takes it away, Elliott Wave analysis closely behind, then actionable trade setups. I guess that's still the same thing. So, all right, perfect. So 78% market analysis, 71% Elliott Wave analysis, 60% actionable trade setups, and 57% pure MotiveWave education. So that's a little of everything. All right, great. Thanks for that, guys. Let's get rolling. Let me close the poll. View polls. View polls. Where'd it go? Okay, close. All right. Hide. All right, perfect. Now you guys should see my the economic data calendar. Is that correct? I've taken down the polls, and now you see the data calendar. Correct. Perfect. Thanks. All right, guys. So thanks for that. So fun markets. It's more the building the anticipation of the data that we just start to get today. It starts to get busy here over the next 2 days. We have the last non-farm payroll number before the Fed's meeting on the 15th of the 16th, where they will potentially hike interest rates for the first time since, I believe, 2007. So, that's about 9 years since we've seen an interest rate hike. So that's pretty amazing. So this is historic. A lot of people shrugging it off. I mean, there's, oh my God, more opinions out there about what the market will do, whether 25 basis points is meaningless, whether it's hugely significant, all sorts of market opinions out there. I am going to CNBC today, so we'll be talking about that all day. Wednesday is my CNBC day. I have one spot left to call into my show, Trading Nation, on CNBC. So if you want to call in, be sure to email me. I always grab callers from this Wednesday webinar. We have one spot left. So if you want to call in, I'll give you some details on that show towards the end of this webinar. Okay, so to data, let's see. Today is Wednesday, and ADP came out at 217,000 on expectations of 191. So a nice beat there. ADP is interesting because it precedes NFP, non-farm payroll, by 2 days. There was prior revisions up by 14,000. So that's a strong number. Okay. And what's interesting is if you look at, this screen I just have up on my top monitor on my top row, I watch, the major markets on a 5-minute time frame. Netflix shouldn't be in there. The tick should be in there. I gotta update. I usually have Netflix in there, but I watch I watch on the 5-minute the major markets. I have the bonds, S&P futures, NASDAQ futures, the 10-year. I usually watch the tick, the NYSE tick. I got to get the symbol back in there, and then the dollar. Okay, so let me just throw gold in there. That is going to be, let's actually crude, dollar, S&P. Let's put the crude oil market in there. Okay. And what's interesting is with that strong number that we saw, what happened? Okay, what happened to the bonds? Okay, the market, it came out at 8:30. It looks like they tried to sell the bond market initially on a strong data, which makes sense, but then bonds are coming back a little bit. So maybe just a little bit of short covering. We'll see. I think what's more interesting is the S&P futures have been selling off since London Open. 8:30 the data comes out, which is right here. And when you start seeing the stock market sell off like it did on good news, that kind of indicates that the market is a little afraid of the Fed moving into tightening mode. And when you start seeing stocks sell off like that in reaction to good data, that kind of tells you what's going on. Looks like the move is a little bit more pronounced here in the NASDAQ. Look, 8:30 comes out, and then boom, the NASDAQ sells off. So when you see stocks start moving down on good news, that tells you that they're going to be nervous if, in fact, they hike. On the dollar side, we've been strong 5 a.m., 6 a.m. in New York, 7 a.m., 8 a.m., and then 8:30 data comes. Looks like had been bid up before. Oh, was it an 8:15 number? Was ADP 8:15 or 8:30? It was 8:15. Okay, that makes more sense. So it was an 8:15 number. So right here is when the dollar lifts off on ADP because that points to a Fed rate hike. Okay, so 8:15, that makes more sense. So yeah, that was pretty much the top in the S&P right there. Same thing with the NASDAQ. 8:15 data was right there. Initially tried to buy it in the NASDAQ and then sold off. Okay, so pretty interesting. What's going to happen here with the Fed to the market? Now, in my charting software, okay, let's look at the S&P. Until the market opens, it seems to be that I always miss a daily bar. Okay, so this is the daily bar from November 30th. It looks like when the market opens at today, I'll get yesterday's data filling in there, which I find is interesting. Tony, maybe if I have a setting incorrect. But on the intraday chart, we have broken through a key fib resistance zone in the S&P. So this was the bearish count that I've been looking at for a good period of time. And we're looking at a good 5-wave move down and then looking at a move back into the 786 retracement, which is right here at 2095. We hung below this for 1 day, 2 days, 3 days, 4 days, 5 days, 6 days. Then finally yesterday, we did break above 2095, and you just got to look over here to the 3-hour chart to see the push above. So when you break the 786 retracement of any potential trend, you would the probability say you're going to deem that trend false. And in fact, this was just a pullback, and we're going to continue to move higher. So if the 786 does not hold the potential trend, you are going to look through the 100% and get up to the 1272 at 2143 in the S&P. Now that's Elliott Wave aside. Okay, you could just trade that, guys, even without Elliott Wave. And this is just a nice setup, even just in itself. If a market does not hold the 786 retracement right here, a really nice trade is to just try to be long for a move up to the 1272 right there. Okay, the whole reason there, those are basically square roots of your Fibonacci ratios, 1.618 and 0.618. They have a nice relationship. 786 generally brings in the 1272. So Elliott Wave aside, if we can hold 2095 on any pullback today in the cash, I'd like to try to get up to 2144 in the S&P futures. Okay, that's Elliott Wave aside. All right. Now, the count I'm working now is this. All right, so let's just kind of clean this guy up a bit. And let me bring over the daily. Actually, I'll bring over the weekly. Bill, good question there. Everybody, a lot of people, 2 people complain about sound. Sound is okay, guys? Let me know if those guys are alone. Is the sound okay? I know I'm super stuffed up and congested and nasally, but okay, yeah, tons of yeses. Alfred, you'd probably want to log out and come back in. We have many hundreds of people on the line, and everyone can hear okay. Thanks, guys. Okay, yeah, just close it and come back in, Alfred. Just close the whole, go to webinar, just follow the steps to come back in. And I am recording this, guys. Okay, so here's where we're at. Oh, wow, I gotta straighten this. Oh, what happened here? I hate when my labels are unorganized and smush all together. I'm not a perfectionist anywhere else in life, but here with my Elliott Wave labels, they've got to be perfect. Okay. That's the truth. I'm really not a perfectionist in anything I do except for this. Okay. All right, so here's where we're at. I think the correction, the August flash crash low that we saw was of the same degree as this little guy back here in June. We're going to have another push up in wave 5, and that will complete a higher degree blue 3. Now remember, your trend waves are 1, 3, and 5. Those must break down into 5 smaller waves. So here's blue 1 breaking down into red 1, 2, 3, 4, 5. Here's blue 3, a nice long extended third wave, which we love to see. Red 1, red 2, red 3. August pullback was red 4. And I was looking for this correction to last a little longer, but as I just described, we just broke through the 786 retracement. So it looks like we want to start to move higher. Okay. Now, a very basic way you can figure out how far a fifth wave is going to go is just do a 1272 extension of wave 4. So we'll go ratio analysis. We know the distance of wave 4 because that's already been traced out, and we're rallying now in wave 5. So you're going to do ongoing wave 5 verse 4. Show price. 2209 is my immediate target. Okay, so of the August decline, of the summer decline, the 786 retracement was 2074. We've tried for several weeks to stay above it, and I forgot. I think Bill. Let me go back. Bill asked a good question. How long do you give for the 786 to hold or not? There's no fixed rule, Bill. I will let it go. Okay. You know what? That's not correct. I generally, if the 786 is going to hold, Bill, it's usually 1 or 2 tests and then it drops. Okay, so for here's a bar, 1, 2, the 786, we break above, it trades down. So generally what you'd expect is the market to just continue lower from the test of that 786. What happened though is the market came back up, hung out for a day, hung out for another day, and is starting to move higher now. You want to see a good, sharp, dynamic response. So it should be done in less than 3 bars. How about that? Okay, so then we came back, and then we've just hung the last couple of weeks just trying to decide, what we're going to do with the 786 retracement on the weekly. Forget about the 100%. It's technically meaningless. It's just psychologically fun to talk about because it's a double top. And then you immediately want to look for the 1272. And if this thing really gets going, the 1.618. Okay, so that is the weekly. Let's go down to the daily. I'm going to show you more detail on the wave count. All right. So now we have, a little bug going on there, Tony. Okay, so now we have a real crazy WXY. I think this is one of the ugliest corrections I've seen in a while, but that's just what it is. We've rallied up in 1, we've gone down in 2, and now that 786 retracement, that whole conversation I just had with you is right here at 2074, measuring the summer drop up. Take that same conversation and apply it to this little move right here. We've come back. This is the daily chart. We dropped in November, rallied back, and we've done 1, 2, 3, 4, 5, 6. Okay, we did 6 days of testing the 786 without any kind of dynamic response on the downside. And just yesterday, we closed up at 2103, which is up here. So now that points towards an immediate upside target of 1272, of 1618, and so on and so forth. So this is the cool thing about Elliott, and this is why MotiveWave is such a great charting package, because you got to keep all these different time frames in your mind. Okay, let me get rid of the green labels. Let's just focus on the red ones. So remember, red 3, red 4, summer drop. There's the 786. We've tested it since the end of October. Basically, November was an entire test of the 786 retracement. We've just broken through. We're going to look for 2209 and 2311. That is calculated from red 3, red 4. Now remember, red 5 exists right here. It needs to be 5 waves. So I'm looking at this as 1, 2, 3, 4, 5. So let's bring in that smaller degree. And again, let's have that same conversation. 1 down in 2. We've tested the 786 for the last week. We've just broken through. So we're going to look for upside fib extensions. Now, you're going to use the other Fibonacci tool to reinforce your resistance zones by doing distance traveled in wave 1 compared to distance traveled in wave 3. All right, so let's do that. Ratio analysis 3v1. Oh, I already have it built right here. Okay, so what this one says is 100% of green 3 compared to green 1 is going to be 2283. And that's right on top of the 2618 extension of green 2. So in order to study green 3, I have a quality or a measured move compared to green 1, as well as the 2618 extension of green 2. So 2283 is a nice zone. Okay. And if this thing really gets ahead of steam, we could go up to higher levels and reach for the 1272 of green 3v1 or even the 1618 of green 3v1. Don't know. We're going to try to be long, and you can't know which fib zone is going to hold. Basically, what we're going to do is take profits into those fib resistance. Okay. There's no way to know. But yeah, if to have nice upside targets and try to wait and hold the positions to take profits into those zones, that's really good because that prevents you from taking profits too soon. Okay, you don't need to know which one's going to top it out. You can't know. But the most important thing, guys, in trading is to control yourself. And by way of all the work we're doing here with Elliott and Fib, you're laying out a very clear game plan, and you're managing expectations for yourself, which allows you to hold on to winners for a long period of time. Okay. So, and again, I'm kind of hesitant to say this, but I'm a little worried that this is going to be an Elliott, an impulse that looks like this. I don't think it's going to be a diagonal. It could, but I have a feeling it's going to look like this. Just something in the back of my mind. A long one, because the wave 1 was pretty long. Short 2, a smaller 3, 4, and then an even shorter 5. I don't know if it's going to be a diagonal, but I have a feeling it's going to look like this. So I don't think we're going to get all the way up to the 1618 and the 1272. I think we're going to probably fall short of 2283 here into the first part of 2016. I have a feeling it's going to be wave 3 is going to be shorter than wave 1, and then wave 5 is going to be shorter than wave 3. Okay, remember, the rule in the Elliott Wave world is wave 3 can't be the shortest of your trend waves. That obviously wave 3 is longer than 5, so that's good. Just kind of just a sneaking suspicion. So that's the S&P. And let's go from the daily, and I'm just going to save all the work I just did, and let's get down to the 3-hour. All right, I'm going to keep an eye on questions too. Come on, 3-hour. Let me just stretch him out a little bit. All right. Now, you got to keep. This is the idea of looking at markets in multiple degrees. Okay, you got to kind of remember this stuff, and that's why I have my charts set up in a very specific way. On my left monitor is the weekly. The middle one is the daily. Here's the 3-hour, and then over on my right monitor is the 1-hour. So rather than having to remember all these patterns, I can just look across those multiple time frames. So remember, we started out looking at the summer decline in wave 4, back up on the weekly. We just went down to the daily and did the November decline in wave 2 and just looked at the third wave rally. Now, guys, we're on the 3-hour, and inside of green 3, we're going to look at red 1, red 2, and just do the same damn thing we just did in on the weekly and daily. We're just using the exact same concepts. It's just you're applying them to smaller and smaller time frames. Okay, so basically, the question that a lot of you probably have is like, okay, if I want to trade this, how do I know which time frame to use? Well, the answer is you need to find out where your analysis on the chart you're studying is no longer valid, which must become your stop loss. If that's at that point size, whether it's the S&P or Apple or gold or bonds or whatever, if that point size that's required risk in the trade is too much for your trading account and your risk tolerance, that's not the time frame for you. If you were doing this trade on the daily chart, okay, and let me just hide the right here. I would have a hard time, guys. If I was trading this count, I'd have a hard time stopping myself out anywhere above the 78.6% retracement of that move up, which is going to be 2035. Okay. On the daily chart, guys, that's 45 S&P points at $50 a point in the futures contract. That's pretty meaty, right? So if you can't handle 45 points of risk in the S&P, the daily chart is not for you. Okay. So then if that's too much, let's go over to the 3-hour chart. All right. So we're going to get inside of this little swing up. Now, I'm going to go ahead and call this another very shallow wave 2. And we're seeing a lot of shallow 38% price retracements in wave 2, which tells me one of two things. Either I'm wrong in my wave count, or this market's really, really freaking strong and it's going to break out hard. Okay, so it's one of those two things. We had a wave 2 retrace only 38% here on the daily, and we just had a wave 2 retrace only 38% on the 3-hour. Let me get back to a 3-hour. So I'm either completely wrong in the analysis or this market's about to break significantly higher. I don't know. Okay. Okay. So let's just take that same thought process here in wave 3. Same deal. 100%. That's your minimum 3v1. That's going to be 2147. I got to get 1272 in there. Your middle target's 2168, and then ideal is 2195. Okay, so that's going to be my my kind of game plan. Okay, for the 3-hour, guys, if we break below 2071, I'm going to take support and put it right here. If we break below 2070, I don't want any more part. I don't want part of that. Okay, 2104. All right, most 60-something% of you are trading stocks and stock options. So, if you're just trading this outright, you're going to do it in the SPY, and you're looking for a move from 2100 up to 2147, 68, and 95. If we're doing this in the SPY, let's just overlay that. Instrument overlay. Let's do SPY. Create. Oh, that didn't work very well. And let's just overlay it. Oh, I gotta take auto scale off. Okay, perfect. SPY is on the left scale. So if you're trading this, you want to do call spreads on the upside. You could do like at the money 211s and match that up just to get up to the 100%. On the SPX on the right scale, 2147, the equivalent's 215 on the left scale, SPY. So, that's a $4 wide call spread. You can do like a 211, 215 call spread. I mean, $4 wide, that's fine. Anybody can handle that. So let's do a little time analysis, 3v1, figure out how far out we need to go. 1618 is just tomorrow, December 3rd. So, actually, I don't like that little guy right there, but that's a long second wave there. But I don't like that study. Forget that. Okay, so I would give this a week or two. You don't need a ton of time, but if the market can handle a good NFP, and then as we move into next week or the week after for the Fed, looks like the upside's in play in the SPY. Okay, so that's just a short-term trade. I would do it over the next 2 to 3 weeks, and I'm going to look at that. Let's look at the NASDAQ. Let me take questions too. Elizabeth, I see your question there, and I'm going to go ahead and answer that one at the end. I'm new to this. These Elliott Wave numbers come on the basic 295 offering. Elizabeth, I'm going to explain that. Don't worry. Let me get through the content, and I'm going to hit that question, okay? Marshall, sorry I'm late. You may have covered this, but short USD, but long SPX, haven't they been trading together? Okay, let's take a look at that one. Great question. Could red 5 be an ending diagonal? Red 5, Andrew, red 5. Yes, Andrew, yes. Yep. Yep, I'll do bonds. Gernard, welcome, first time. Yeah, I'm doing a lot in the S&P right now. So yeah, yep, we'll dive in. I've got 13 minutes, so I'll get moving. Yeah, Dave, no, I don't think it's going to be a 100-point S&P move by Friday. I think this is going to take a couple weeks to play out. How can Draghi do enough to please the markets? I'm betting he does something stupid. Euro's at huge resistance. Actually, I think the dollar's at resistance. I did it in a free video last night, the members video at Trading Analysis, and we'll talk about that one. Rick, I just love the 3-hour chart. The 2-hour for me just doesn't, it's a little too short term. 4-hour I think is too big of a picture for my swing trading. I just have always felt comfortable on the 3-hour. It's my swing trading time frame. Julie, will the NFP news make that dollar stronger then? I think the dollar's been bid up into NFP and into a potential Fed rate hike. I think it's set to move lower on buy the rumor, sell the news. Yeah, sir, I've heard that too. NYSE no longer allowing stops. It's crazy, isn't it? Just makes the case for options. You really need that. James, good question there. If you're doing the 211, 215 call spread, would you sell if 2070 broke? Yeah, yes, James, 100% correct. 2067 is fine, right there. And in fact, James, I don't want to confuse you guys too much, but I don't want to get too much detail, but wave 3 is supposed to be 5 smaller waves. So if I'm trading this, and I may do it, I want to look to do it in the NASDAQ, I probably would go down to a smaller time frame, and I might put the stop below that wave 2 at 2080. Right? So 2080 equivalent of 208.65 in the SPY. If this move's going to go, I really want to see 2095 hold support, because that was the major decision point over the last week. We broke above it yesterday. So it's got to hold for me, but I will allow a move down to 2080, anything below that, and I don't want any more part of this trade. Yep. All right. Okay, so you guys want to get in the other macro markets. Let me just hit the NASDAQ first, and then we'll go over to the macro stuff. I see those questions coming in. Come on, baby. You can do it. You can do it. All right. So same thing. Such a shallow. I might have to restart. Delete. 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 It won't let me delete it. Delete, delete. No, okay, that's fine. Just forget that ABC. It's kind of stuck on the charts. So little wave 2 there in the NASDAQ. You know what, guys? I gotta restart this real quick. It's breaking down on me. Hang on one sec. Browse. I'm just gonna save it. Create. I'm gonna do a quick restart. I've been running it, and I had the scans going for you. I don't know if I'm gonna get to them today, but another time I got to show you how I do the scans for third waves and fourth waves, how I do the Gartleys and butterfly scans. I will definitely do that at some point. Just a quick restart. This is going to take 10 seconds, 20 seconds. IQ. And we're going to connect them. And we should be back right now. Yep, Bruce, I'll hit Rudd as well. Yep. Todd Main. Okay, we're back. Okay, so back to the NDX, and let's let this chart come up. Okay, perfect. There we go. So in the NDX, I kind of think this guy is acting a little stronger. The Nasdaq's acting stronger, so I'm looking at a 1-2-1-2 pattern. So this is a potential third of a third wave here. This is where your big breakout is. So the red 3 target minimum is going to be 100% at 48.42, and then the ideal is 49.78. And then if we do the ideal target for little black 1 compared to black 3, short term, it's going to be right there. So ideally this is the path right here. Pull back in 4. Okay, we'll go right in the middle of the ideal. So the ideal stopping point for red 3 is somewhere between 100% and 161. And then the ideal stopping point for black 3 is like right around here. So, it's great to have a model. It's great to have a map of where you expect the market to go. Sometimes it follows it, sometimes it don't. But most important thing is we've planned our journey. We're not likely to get too far off course. And if the road takes a turn that we don't expect, then you just very quickly, calmly close your positions, control risk, step to the sidelines and say, I don't have a good feel for this market. That's why I love Elliott, because guys, we're going in locked and loaded with a really good game plan. If it works, we're going to maximize it. We're going to be long, take profits, rebuy on the way for a move up. Okay, we should be able to basically run the show in here. If we're wrong and the market just does something completely unexpected, say, okay, guys, this is not our day. Step aside, control your risk, and we're going to live to fight another day. Okay, that's why we go to all this painstaking work. That's why Elliott Wave is a great trading tool. It's not a great forecasting tool. There are no great forecasting tools. Nobody knows what's going to happen in the future. The best trading methodologies are one that helps you control your own emotions and basically keeps you out of your own way, which is really what we need to do as traders. Okay. So that's the NASDAQ, loving that. I have a lot of stocks that I went over with the members last night in terms of NASDAQs on the upside. So rather than just doing the NASDAQ outright, I'll give you a quick glimpse of what we send to the members here. This is my homepage, tradinganalysis.com. You go to the members area, and we'll go to the daily video. These are all our trades. This is the video for today. So we did setups in Starbucks, which were long, Facebook, Microsoft, and Netflix. Okay, so those are some of the good ones that we're watching. Let's do Netflix. Let me do Netflix quickly. Gerald, yep, I'll go back to the NDX and show you the Q's equivalent. Yep. In fact, let me do that before I do Netflix. That's a good idea. All right, so here's NDX. Come on, 3-hour chart. The 3-hour chart takes longer to calculate. It's kind of an odd number, so it takes a while to calculate. Instrument, come on, add study, instrument overlay, QQQ, create, and we'll just scale them up, take auto scale off. And this isn't rocket science. This isn't like exact science. You just got to make the best fit you can. Okay, that's pretty good. All right, so near term Qs on the left scale. Current price of 115.25 in the pre-market. So we're looking to get up to minimum in the NDX 47.73, on the Qs $116.18. And then from there we should have a pullback back towards about $115.30. And then if we can get up to 48.50 in the NDX, and that's just shy of 118 in the Qs. Okay, that's the equivalent in the Qs. Netflix, this is a pretty straightforward setup. Like this one, we are tracking him over here on the blue count. Here's the daily on the left. And what's really nice about this is same kind of concept of the 786 retracement, but when you get a trend that's going and you get this ongoing leg, which has gone 100% of the prior swing and is not really pulling back, you're going to look for it to get up to the 1.618, which is 137.13 in Netflix, right? So the measured move, the 100%, a lot of times that will reverse. If the market is going to fail, this is the point at which it does so. So we've just not seen it here. In fact, we're just pushing through the 100%. So right here, you can do a quick little trade up to the 1.618. So here, guys, Netflix, I think, is pretty cheap in terms of implied volatility. I think it's like in the bottom third of its 52-week IV percentile rank. So I would probably be doing out of the money call spreads, like a 130, 135 call spread upside in Netflix. Time analysis 3v1, December 17th. You probably could just do those. In fact, if we act strong today, I'm probably going to put that trade out with clients today. Just go out to the D's monthlies and just do like a 130, 135 call spread in Netflix. That looks pretty good. Okay, let me go back to the rut. People are asking me about that. This guy's finally starting to wake up. Small cap's been underperforming for a long time. Finally coming back. In fact, let me do this. I'll just do this in the chart room. This is the members area. I'll give you a glimpse inside the members area here at Trading Analysis. So that's the S&P. There's the NASDAQ, and there's the RUT. Oh, nope. Never mind. Didn't update the Russell chart yet. Got to do that today. Members, I'll have that updated for you. Sorry. Okay, so here's the count in the Russell. Big old flat in the Russell, and it looks like we're moving higher in red 5 to complete the blue 3. And that's what we're looking for across all 3 major indexes, is that blue 3 top. Okay, and that's going to bring in a serious decline once we get up to that blue 3, which would be in early 2016. So that was the weekly. Here is the daily. Oh, sorry. I've been coughing for days. I don't know how I'm going to do TV today. Okay, to get up to blue 3, this is going to be the path that was green 1, green 2 in the rut. And let me do IWM as the equivalent, instrument overlay. Just kind of snap him into place. One more, and there we go. Okay. So right scale is the RUT, left scale is the IWM. Minimum's going to be 125 and a half on the IWM, which is 12.69 in the RUT. There's your middle target, which is 128 and a half bucks in the IWM, 13.05 in the RUT, and then the 1618, which is your ideal. That's going to be a perfect wave 3. That's going to be $133 and a quarter in IWM, and the RUT's going to be $13.50. It's kind of a little inverse head and shoulders here, which is fine. I'd much rather be trading the NASDAQ because that's a stronger index than the Russell. The Russell's been lagging forever. So just look out for that. Just use IWM as confirmation. NASDAQ is your better trader. Okay. So that is that. And I know the market's open, and Elizabeth just asked, I'm new to this room. Do these Elliott Wave numbers come in the basic 295 offering? So here's the deal. And I know there's a lot of new people in the room. I am Todd Gordon. I run tradinganalysis.com. This is my business. I am one of the earliest users of MotiveWave software. Okay. MotiveWave is good friends of ours. Obviously, we use MotiveWave quite extensively. We are unrelated companies, though. We are friends and colleagues. So this is MotiveWave. This is the charting package. This is how you registered for the Wednesday webinar off the homepage on MotiveWave. And basically, this is your charts. And if you're looking to figure out how to use them and to get trades using MotiveWave, this is tradinganalysis.com. And this is, if you want to sign up for a trial, you can do that right now. I have an offer for you. This is $47 off the website. But if you go to this address, tradinganalysis.com/motivate, MOTIVATE, tradinganalysis.com/motivate, you can get the trial for $7. And you'll get 30 days of our members area, SMS trade alerts, webinars, tutorials, all that great stuff. Okay, so that's the difference between the two companies. These are your charts, and these are the trade setups and alerts. All right, so we'll leave it there. Also, if anybody wants to be on the show, I know it's a busy Wednesday. I'm throwing a lot at you. I do host a show on CNBC Trading Nation, and 1 o'clock we will be live right here, and they're already tweeting for us. If anybody wants to call in and we can just talk about the market, talk about a stock, a position you're in, talk about technicals, anything you want. This will go live at 1 o'clock right here, and then you won't be on the live TV show, but you'll be live online. It'll be a headliner on CNBC on the website, and they turn this into a live broadcast where I look at charts, I trade live and all that. So if anybody wants to call in and be a guest on the show, I will get you in contact with my producer at CNBC. They will call you, and you'll be on right about 1 o'clock in New York time. So if you would like to call in, I believe we have 1 spot left, so you better email me quick if you want in. I'll make you look good. I always do. Just email me, Todd at Trading Analysis, and say, I would like to be on the show. And that's it. All right, guys, so I hope that helps. Let me just look at questions here. Julie, yeah, I'm going to do another options class for sure. Arthur, you got it. Russell's starting to play catch up for sure. All right, guys, I'm going to leave it there. Market's open. Looks like it's really flat right now. Not surprising, ahead of NFP. S&P, NAS, and RUT all inside at 0.2% up or down. Bonds down a touch. Dollar up a bit. Gold down 0.5%, $5. Crude kind of pressing the lows. Looks like Asia was up overnight. That's interesting. Let's just look at the sector stuff. And I'll do another class on this, how I do my sector analysis. You got to click on them to pull in the data. Looks like XLF and XLV aren't open yet. That's kind of surprising, though. I bet you the financials are open. Maybe it takes a little while for the ETF to open. So energy materials are lagging today. So far, technology and healthcare are the strongest, and financials aren't open yet. SPY. So kind of flat today. Not surprising. Ooh, like that Netflix, up 1% today. Starbucks. Okay. All right, guys, we'll leave it there. I hope that was enjoyable. And yep, I'll have I will have the recording out on YouTube today. I'm also going to upload another video. I've spent time doing, I don't know, totally off topic, but you go to, I don't even know how you'd find it, to be honest with you. It'll be on YouTube. Tony does post it on the MotiveWave site. Just search my name, Todd Gordon, Trading Analysis, in YouTube, and the Wednesday webinar will be there. Wednesday webinar with Todd Gordon. I'm also going to post a video. I've been working on it, editing it in Final Cut Pro. I went on a buddy's bachelor party. We went scuba diving in Grand Cayman, and I've been working on editing the video, so I'm going to actually post it up today. So there's some funny stuff in there. You guys might get a kick out of it. So check that out on YouTube. All right, guys, we'll leave it there. Thanks so much. Hope it was enjoyable, and have a great rest of the week. And catch you all next Wednesday. Take care.